Time now for an in-depth look at the market news on this Friday, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for making time on this Labor Day.
Thank you very much.
Well, stocks on Wall Street were down overnight. Lots of factors there, including unemployment, earnings, and more. But for the S&P, April turned out to be the best monthly gain since 1987. What's the story on Wall Street?
Yes, if you look at on the Wednesday movement, we saw very strong rise for the U.S. market because of the drugs that will be coming into the market. Hopefully, we'll be able to solve this problem of pandemic. But after that, yesterday we saw economic numbers coming through, and these numbers are looking quite bad. The number of the Americans filing for the jobless benefits was amounting to 3.84 million people last week, compared to the 4.4 million people on the previous week, and also market expectation of 3.5 million. So the numbers were coming in much higher than expected, and total amount in the last 5 weeks or so, we are seeing about 30 million people filing for these the unemployment benefits. Because of this, Fed announcing an expansionary policy in regards to the program of lending for small and medium-sized companies. We're clearly seeing the struggle between these boosting measures versus the actual economic numbers are coming in a very, very perturbing numbers. If you look at the futures market of U.S. right now, for tonight, it is going down by about 2 to 2.5% for 3 indices, and clearly most of the gains we saw on Wednesday are probably wiped out over the last 2 days if this actually happens. However, though, if you look at the liquidity condition of the market, it looks very attractive. We have seen money supply growth rate coming in at 18% M2 growth rate. So clearly the question mark is what happens after this pandemic, where the summer times when the lockdowns are all relieved, and if that's the case, then the consumption will come in at very strong numbers. So I think that this is just a push and pull between when would the economic numbers will recover versus how bad the numbers are looking like at this point in time. So right now, I think that the market will be probably fairly volatile for the ending this week.
Well, here in Korea, the markets are closed for Labor Day, but there were some gains ahead of this holiday weekend. Where do you see things going next week and beyond?
Right. When Monday opens, depending on what happens to tonight, the U.S. market, the overall trend will be probably decided next week. Most likely, it's going to be probably flat in a sense that it might need some time to take breather. If you look at the U.S. market, as I said, the numbers are looking very good on Wednesday, but last 2 days, including tonight, probably won't be looking too good. So having said that, Korean market will be probably on a sideline when it opens up on Monday. Also, Trump seems to be trying to blame China in regards to the COVID pandemic and through some kind of measures in regards to tariff. If that happens, that is additional protectionism amongst the countries, and clearly that will reduce the economic activities even further in the future. So that is not necessarily a good way of dealing with the situation at this point in time. But nevertheless, if Trump is trying to win this election, he might really come out with this kind of measures, and that definitely is a negative news for the global market. So we have to watch out and see how things are played out. I don't think the market is going to be any strong on Monday, nor it's going to be any weak because of these kind of uncertainties remaining. However, though, we are recommending investors, if the market falls on Monday, it is a time to buy on weakness because a lot of the liquidity conditions as well as pent-up demands are all there. And we do expect third quarter numbers are looking quite interestingly good, especially for Korea, as we are seeing pandemic issues are kind of passing through the winds. And we hope that the market will continue to do well due to the economic activities recovering in third quarter.
Well, in the meantime, Korea has posted this massive decline in exports. So what effect do you see that having on the markets?
Right. As you said, export numbers are down 24.3% YOY. And because of that, we are seeing a trade deficit for the first time in the last 8 years. This is clearly showing that the domestic activity is doing really well. So the corporate earnings are not going to be as hit by relative to other competitors, but nevertheless, export numbers are not going to be looking good for at least for this month, for previous month, and maybe for this quarter. However, though, we are seeing continuation of resilience in regards to domestic consumption, and also these boosting measures will be used over the next about several weeks. So every family with, say, 4 people in family will receive about 1 million won of the COVID-19 related funding. So that will probably translate into some kind of domestic consumption. So pent-up demand will be coming through, and the numbers will be looking quite good in the domestic numbers. So yes, there's concern about the export numbers, that these numbers are coming in very low, but domestic consumption and the boosting measures will probably cover for some of these losses. Also, going into probably the third quarter, most of these export numbers will recover because most of the lockdown will be removed by then. And if that's the case, pent-up demand of various other countries, including Europe and U.S., will play a positive indications for the export numbers. So we do expect U-type of recovery, particularly in the third quarter. So if the Korean market corrects because of these export numbers on Monday, we think that there is an opportunity to buy into weakness.
Got it. All right, Mr. Yu, thanks so much for coming on this Labor Day. Have a great weekend.
Thank you very much. You too.